We're in a crazy market. Prices are high, interest rates are low, and everybody wants to know, should I buy now? And the answer is yes, definitely, probably, maybe, maybe not, of course not, I don't know. Let's talk about it. Hey guys, Matthew Schnepf here, licensed real estate agent in New York City. And before we answer the question that's on everybody's mind, we're going to go over some do's and some things to avoid before we buy our homes in this real estate market. So hit the like button, hit the subscribe button. Let's get the show on the road. First step to buying a home is finding your location. Make sure that it's a place that is comfortable and important to you, and why it is important to you. Is it close to work? Is it close to school? Is it close to family? Is it close to solitude? Does it give you what you're looking for in a location? Because that's the most important part. Do not buy a home just because it's in an area that is lower in price, because areas that are lower in price are lower in price for a reason. Usually they're in bad locales, higher crime areas, worse school districts, they're close to expressways, they're in hazard zones, flood zones. So do not go looking for the cheapest area. Look for the area that fits your needs. Find the ideal place for you, and then find the deal for you. Most importantly, be comfortable with your monthly payments. Monthly payments can fluctuate. Is your home higher in purchase price but lower in taxes? Is it lower in purchase price but higher in taxes? Are you buying a single family home where all of the costs are on you? Or are you buying a home that has another unit for rental opportunity so that it can offset some of your costs? So homes are unique, and each different home will put forth a different monthly payment. So once you figure out what monthly payment you're comfortable with, then you can find a home that fits that need. And remember, if you're finding a home with a rental unit, to subtract 75% of that rental unit and not 100% of that rental unit income from your monthly payment, to add in some wiggle room if there's any vacancies or repairs or things that you need to do. So take that into consideration. Another thing, are you willing to do some work? Are you renting where you currently are? Do you have some extra time? Are you still living with friends and family? Are you in a rush to get out and get into your new property? Are you relocating because of a new job? Take all these things into consideration, because just doing a little bit of elbow grease could save you a lot of money in the purchase price of your property. And if you were to buy a property a little bit undervalued because it does need some new repairs, some change in the paint, some fresh coats, new windows, maybe you need to rip up the carpet and put in some new flooring, or maybe you need to upgrade the bathroom a little bit, you can wind up saving thousands and thousands of dollars if you purchase these properties and do the work yourself. Or even if you pay a contractor to do the work yourself, you can still wind up saving so much money, because once your home is fully finished, now the equity value in your home increases. In a future video, I want to talk about how we can instantly add equity into our home within 3 to 6 months of purchasing it. But that's all I wanted to get to right now. So keep that in mind when you're making your decision on the next property that you're going to buy. Do you have the time and effort to do some work? Next thing is, you really want to know the home's value before you even put in some offers. So check the comparable homes that have sold in the area. See if you can get a comparable market analysis. Try to understand how quickly things are moving in that particular area, and this will all get you a better sense of the price value of where you need to start your negotiations. When you have finished your negotiations and you come to a deal, make sure you get the home inspected. Do not give this up. Do not waive your right to a home inspection, because getting a good deal now in the purchase price is not going to be worth the headaches that you reveal to yourself after you've purchased the home, all because you didn't want to get it inspected. Spend the $400 to $700 that it'll cost in your market to get an inspection, and potentially save yourself thousands of dollars and plenty of headaches. So once again, if you feel like you've gotten any value or this has helped you in any way, hit the like button, hit the subscribe button so that this knowledge could start to spread like wildfire. Time for some do nots. Do not waive the mortgage contingency clause. Do not. Don't do it. Okay, that's the end. No, I'm just kidding. But seriously, do not do this, because this can protect you in the future in the off chance that when it comes down to committing to the loan that you no longer qualify for the terms. Maybe something popped up in your life. Maybe you had an unforeseen expense. Maybe things have gotten difficult. Maybe you've lost a job. This mortgage contingency clause is put in place to protect you buying your home from things that you wouldn't even think about. So under no circumstances do you waive the mortgage contingency clause. Unless you're buying it cash, then there is no mortgage contingency clause. But that's a different story. Do not buy a home that has things that you don't like that you cannot change. For example, you can change poorly painted walls. You can change carpet. You cannot change the size of your yard. Chances are you cannot add a basement to your property. Chances are you cannot change the location of where your house is. So do not buy a home that has things that you cannot change yourself. That's buying a home with instant regrets built in. Do not buy a home you cannot afford. If you cannot comfortably afford the monthly payments, think about buying a cheaper home, a less expensive home, or a condo, or a co-op, or continue to save up until you can buy a home at that payment price that you were looking at. But do not get yourself into a situation where you have to struggle or you have to feel nervous or uneasy about your mortgage payments, because that is the recipe for disaster. So when we talk about purchasing a home, we don't talk about the price. I can afford $400,000. I can afford $600,000. We have to talk about monthly payments, what you can afford as a monthly payment. The monthly payment is dependent on a lot of different things. The purchase price, the interest rate that you got, the taxes, how high are the taxes on the property, the insurance, is there added insurance, is there flood zone, hazard insurance. All these things come into play. And they can also be affected by how large of a home you're buying. Is it a single family? Is it a 3-family home? Because having a 3-family home and renting out 2 other units will definitely decrease your monthly payment. These are factors that you need to understand. So, in these high prices, low interest rate times, should you buy your home now? So let's use this as an example. This is a house that I have listed for sale in Brooklyn. It's a legal 2-family home with 3 full units. It's in wonderful condition, fully renovated. That's not why I'm showing it to you. I want to get you to have an idea of the difference in interest rate versus purchase price and how that affects your monthly cost. So all we have to do is go to a mortgage calculator or go to Zillow like I'm about to show you, and we can start gauging how that works. So go over to where it says Overview, Facts and Features, Home Values, Prices and Tax History. Click to the right and click on Monthly Cost. Now I already have it set up to show you where the home was exactly a year and a half ago. 18 months to this day, this home was listed for sale at $770,000. And the interest rate back then was 4.6%, which with 20% down, and this will make the same effects no matter how much you put as your down payment. Right now I'm just showing you purchase price versus interest rate. That will give you a monthly cost of $3,844. So if you were to purchase the home today, and we actually have offers above asking price, every home is going above asking price. We have offers today for $870,000 on this property. at an interest rate of 2.8%. Now that is a monthly cost of $3,636, more than $200 less than if you bought the house for $100,000 cheaper, all because of your interest rate, which is why there are so many buyers on the market right now, because everyone wants to capitalize on this low interest rate, which sticks with you for 30 years. So now you say to yourself, wait a minute, I'm buying a home almost $100,000 or more than it is worth. So, especially in Queens, Brooklyn, or the 5 boroughs here in New York City, and this is true in most markets, homes will always increase in value. So your purchase price, even if you buy it a little bit above market value because of so much competition, will eventually catch up to itself. So if you bought the home at $870 when it was worth $770, and in Brooklyn houses increase in value 5 to 6% year over year, it would take you 2 to 2.5 years to catch up to that $870 mark. And then everything after that, all subsequent years, is just appreciation on your home. It's just appreciating in value and gaining you more equity. Whereas if you were to be locked in at a 4.6% interest rate at $100,000 cheaper, you're going to be paying that extra $200 a month for the next 30 years, which adds up to a lot. And all that money goes to interest. It does not go to the equity of your home. It does not help your home's value. Do not give the bank more money than you have to. Trust me, they don't need it. To sum it all up, when should you buy a home? Well, you should buy your home when you can afford it. And this is a lot easier than you think. There's a lot of things out there to help. You can buy a home with as little as 3.5% down. You can get programs by banks that are down payment assistance that give you grants or money towards the down payment of your home. You can apply for 203K loans, which help you to fix up homes that are in distress. So talk to a mortgage lender. Understand what you are able to qualify for right now, because it may shock you, it may surprise you. The moral of the story is buy a home when you can afford it. It'll be the best investment you ever made in your life. Thank you guys again. I'm Matthew Schnepf, licensed real estate professional here in New York City. All my contact information is down below. Please comment. Let me know if there's anything you have questions about, if there's anything that you would change, and I'll see you guys next time.